So Easy Equity has made two new stock markets available on the platform for us to invest into. When I talk about two new stock market, I'm talking about the London stock market as well as the European market made available for us to put our 100 rand, 3,000 rand, 10,000 rand, or even our 50 rand into the stock market. So on today's video, guys, I will sharing my approach in these two new stock market as well as sharing my top three stocks or shares or companies I'll be buying in the London stock market. So if you're interested in knowing which stocks are those one and how I'll be approaching these two new market, please do consider hitting the like button, hit the subscribe button, and tell me what you think about my video, guys. You know I always appreciate your input in growing this YouTube channel. So without wasting any time, let's get into today's video. Hello, future millionaires and billionaires. Welcome to an insightful and informative video right here on my YouTube channel. Before I go too deep in today's video, guys, I'd like to first apologize to you guys, my loyal subscribers that have always keeping on supporting my channel. I know for the past few months I have not been uploading consistently, and that is because of academic issues that I've been having to the schoolwork. I've been struggling to balance with everything, and this platform YouTube was the one that suffered the consequences of me not being able to plan. As you know, guys, I'm a human. I have schoolwork that I have to put first before content, so that's why I was not being able to keeping on uploading. But I promise moving forward, as of today, I'll be uploading one video per 2 weeks, but I also want to upload one video per week. But the minimum, guys, the minimum of uploading is one video per 2 weeks, because I have to manage my schoolwork as well as manage content, because I enjoy creating content and it's something I love doing. So let's get that out of the way, and also let's get out the disclaimer out of the way. As always, guys, none of my video constitute as financial advice, but only for educational purposes. So I'll never tell you what to do with your money. So let's talk about those two new market made available in Easy Equity, the platform that we all use to buy shares. Now we can buy shares in London and the European market, meaning the shares of Adidas, the shares of BP are now made available for us retail investors. And for me, I've always wanted to go to the European market, but I want to break you down the risk and the approach and advantages that I will be thinking about as I enter that phase or that market, basically, as I have in some. So I'm sharing my approach individually. So, and I hope that will motivate you and make you think about how to create your own approach in regard to this two new market. So let's first talk about the four risks that are making me conscious about investing in those two new market. The first one, guys, is the exchange rate. When you are investing internationally, you need to be aware that you cannot buy those shares using South African rands. You must buy those shares using the currency of that specific country. So when you are investing, you need to be ensure that you understand the risk that comes with exchange rate. But sometimes you deposit 500 rand in the South African rand and change it to to British pound of the value 500 rand. But when you're turning the 500 rand back to African rand, it's no longer 500 rand, but it's valued down. Now that 500 rand, which you turn to, let's say you got 10 pounds. 500 rand was equivalent to 10 pounds, right? So you buy shares, you invest, and then you want to sell back your shares and convert them back to African rand, you get back your 10 pound. Your shares didn't go up, didn't go down, they stay stagnant, and you turn it back to South African rand. Then 10 pounds are no longer 500 rand, but now are 300 rand. That is possible, and that's possible because of the exchange rate. I know that the example I made is an extreme case, but I'm not saying exchange rate something that you must be aware of when you're investing international, and specifically when you're investing in the European market as well as the British market, buying pounds or buying euros. So you need to be aware of that, because that's a cost and a risk that you will have to suffer as a retail investor when you're investing into these two new stock market. The second risk that you must be aware of as a retail investor going into the London stock market, going into the European market, is the issue of the politics of those areas or the geographical locations. More specifically for me, I'm worried about the British political issues because they find people who are extreme left or extreme socialist or extreme communist are really extreme, guys. So they're far extreme of the extreme. The same with white supremacists, conservative. They're extreme. America has nothing on the UK. Nothing, like literal, guys. They probably don't see the media covering the UK as much they cover America. So that's the thing as well that has me worried in my approaches. I'm a little bit concerned about the politics of British, to be direct and to be specific. European general, I can say the same about other nations there. We know what's happening in Germany. We're seeing also a rise in the far right side of politics, but it's not as much as compared to Britain. And Britain is a little bit worrying to me. That's why my approach will be conservative, be a little bit protective around the London stock market because of the unstableness of its politics, basically. So retail investors, be aware of the politics of those two new areas you'll be putting your hard earned money to. The third issue that has me concerned with, by the way, because I have my channel right here, so I keep on looking to it as well, is a limited access to information. Because for me, when I invest into companies that I have seen perform. I have seen or experienced them doing what they said they will do. So us entering those two new markets, we'll be entering them not knowing some of the companies that are there, not have experienced them. We only know them through online risk, but we have not, I'm so sorry for that, but we have not directly experienced them. So that's a little bit concerning, but not too much of a risk. But limit to information is also a risk that you must be aware of as a retail investor, because you'll be relying mostly on online sources as opposed to when you invest shares into Sasol, shares into ShopRite. You see ShopRite, you experience the service of ShopRite, you shop at ShopRite, you are using Sasol, a garage, you are seeing Sasol factories, industrialization of Sasol towards Secunda and all over the place, as well as the same can be set up at ABSA. You experience it when you invest into it in South Africa. But that wouldn't be the case on those two new geographical locations. I know Adidas, we can get Adidas in South Africa, but I'm just saying that in general, that's something as well a little bit concerning for me, but won't play that much of a huge factor. The fourth risk that I am worried about as we're entering into this market, these two new market as retail investors, while we're still in the bear market, meaning that we don't understand how low can be the next low. We don't understand how even if we do fundamental analysis of companies, do technical analysis of companies, we are still in a bear market. We don't know how low can it drop. So that's something as what you must be aware of before you enter those 200. We are still in a bear market. The market is still trending in a downward trend, and some companies, yes, they are seeing recovery from this bear market, but majority are not. So be conscious about that as well before you put your money there in the London or European market. So that's a form of risk that have me worried. So what is my approach on this two new market made available on Equities? Number one, I am not rushing it. I am not. The news came in when I have not budgeted for it. So I'm not going to try to squeeze money here and then to rush into buying shares in the London stock markets, European markets, or whatever the case may be. I am not rushing there. I am not going to rush myself. What I will do, I will keep on with my financial plan and see where on later on can I put my money. Because you want to put yourself at a disadvantage of taking money where we're supposed to go to serious things, and now you're putting it into shares of Adidas because now you can buy Adidas and you want to buy it. Because you can do something doesn't mean you must do it. Stay with your plan. If you can be able to allocate money for buy shares of Adidas in September, wait until September. Is Equities not removing the European market anytime soon? So don't rush to take money that you are supposed to go to buying nappies for yourself, or money you're supposed to go fixing your car. You want to go buy shares of Adidas, want to buy shares of Anglo-American in the London stock market. No. Stay with your plan. Those markets are not going anywhere anytime soon. Don't put yourself in a financial disadvantage just because you want shares of Adidas, you want shares of Rolls Royce, you want shares of BP. No, stay with your plan. That's the first thing as well I'll be doing for myself. I'm still in a financial plan. I'll see maybe in September or October, I may be able to have enough money to buy the shares I want. But for now, I cannot. I'm not worried. Second thing as well, guys, the current state of is equity having those two market is limited stocks. So do not go ahead and buy those stocks because you think because I have access to those stocks only, I must buy them only. You may request through is equal to add other stocks that you do not have. So that are not available there in that platform right now because is equity made the European market, the London stock market available only with few companies. So if you want more companies to be available on the platform that are listed there, we must send requests. So you're not only limited there. So don't buy companies that are now available only and just put your mind to companies you don't even fully like or fully are convinced that they're good companies just because they're the only ones available. Send request and wait. There's nothing wrong with waiting, guys. The stock market is not going anywhere. The stock market will still be there even in November. Do not rush. Those stocks are now limited with few stocks available in the London stock market, a few stocks available in the European stock market through Easy Equity. If you want more, you must send request to Easy Equity. Easy Equity will add them. So do not just buy Adidas because only Adidas is available. No, don't just buy BMW because BMW is the only one available. There are other stocks that are available there that you may want but are not available yet. So do your own research on what else listed there. If you want something, send requests to Easy Equity. Rally people to support your request to have those things, to have that stock market made available there. That's the thing with me as well. I'm not buying something I don't want. In my top 3, some of those companies are not even available in Easy Equity yet, in the London stock market, in Easy Equity platform yet. But I will be sending requests to ask Easy Equity to get those companies listed there. So that's it in terms of my approach as well. I'm not rushing. I'm not buying something I don't want to buy. As well, I'm a little bit. I'm also well. I am aware of the risk I have mentioned in my beginning. So what are my top 3 London stock market London stock market listed shares that I will be buying or be sending requests to have Easy Equity make them available so I can buy them? The first one, guys, is Airtel Africa. This company is the second biggest telecommunication company in Africa, but listed in Lagos, Nigeria, as well as in the London stock market. So it has dual listing, Lagos, Nigeria, as well as the London stock market, Britain. That's where this company is listed, and I'll be looking to buying it there in London. And the reason, okay, the fundamentals good. I agree with everything, but the reason that I like this company is a growth company. This is a company that is competing with MTN aggressively. For those who know, I'm not a fan of MTN. As much as our stocks is doing well in the GSE and has been seeing a little bit growth in Africa, but I'm not a fan of MTN. I don't own shares of MTN. But in London, I'll be getting Airtel Africa that's competing with MTN in Africa, mostly in West and also in East Africa, so West, East, and a little bit of North Africa, as well as Tele Africa is also a little bit going into the Middle East as well. So it's chasing MTN. And the reason I think this one is better than MTN is the simplicity of its service, as well as the simplicity of the money service that it's giving, because it helps a lot of African countries being able to transfer and send money in the simplest way compared to MTN, as well as the bidding for the 5G system in Nigeria. I feel, let me leave that. I'm not touching that now. But I believe in this company, and I believe it's better than MTN. And it's the second biggest, largest one in Africa. It's sitting around 135 million customers, active customers in Africa alone, and growing into Middle East as well. And I said this company is good overall. I love, like my friend, I did all my research. I love it. But the one that makes me say it's better than MTN is the simplicity of its service. And one thing I know about African people, they love simplicity. So this company will see growth and I'll be holding it for the next coming few years. But I'm really happy with it. So that's my top one. Number two, it has to be Rolls Royce. I know when I say that name, you're all thinking about the car, but I'm not talking about the car. Yes, it is part of the car, but I'm talking about the company itself. This company is in defense. This company is in power supply. This company is in aerospace, is creating engines for airplane. This company is in the luxury departments. When we talk luxury market departments about the cars and everything else that they do in the marketing luxury field. And this company as well, fundamental wise, good. But the few each of these companies had at this aerospace and its defense division saw a huge impact during the COVID-19, and this led to the company selling one of its defense division, as well as taking in a huge amount of debt, as well as laying off I think around 2,000 of its engineers. And this company has been struggling and has been trying to recover. And in its 2021 results, this company is shown to have performed well, and that those decisions they make, management were bad decision, but they help the company recover. And I believe it's still selling at a discount, still selling low, and it's still yet to fully recover, especially the aerospace side of it. I believe it's yet to fully recover. That's the fail that unit or that department of Rolls Royce, and I believe they're not fully recovered there yet. And I say this is a company for me to have for the long run as well, because many people may not classify Rolls Royce as a growth stock, but it is. It is for me. It is. And I believe it's still selling at a discount. This company, especially the aerospace and its defense unit, have not fully recovered from the pandemic, my point of view. I know they took up debt. I think they took around 50 million pounds, no, 50 billion pounds of debt during the COVID-19 period. So many people are a little bit, but they say that amount of debt, like 50 billion pound, or 50 billion pound of debt. I don't know how much that in rent. How much is that in rent? Anyway, who cares? So many people are a little bit cautious about that, but for me, I'm looking at the 2021 results. I'm saying these results are good. Those results are perfect. They show that the leadership is knowing what it's doing. So I am sold. I am in. The third company I'll be buying in the London stock market, it has to be the controversial BP Garage or BP Energy Company. I know a lot of people are not fan of BP. I know people know me. I left the mining industry of South Africa. They're like, why did you leave the mining industry of South Africa and not invest there to go run into such a controversial company like BP? For me, number one, dividends. Number two, it's a stable company. My foundation. This is my foundation. You know me, guys. I always love conservative company. Conservative company also give you good dividends as well. And this is my conservative London company. The dividends are good. I think it's 4.4. The earning ratio is good as well. It was not impacted that much by COVID. The renewable energy department or division is particular and one of the few companies industrialized in renewable energy, one of the huge ones as well, globally speaking. So why not have it? I think the question is not why have it, it's the question is why not have it. And for an international company to pay such dividends, it will be a good a conservative company for me to have in my London stock market portfolio, and one of the hugest company in the London stock market as well, giving myself a layer of protection with conservative companies. Like the same thing people do with Coca-Cola and Microsoft in the New York stock market is what I will be doing with this company in my portfolio in the London stock market. So those are my top three, guys. Tell me what you think about them. Are you happy about them? Also, share in the comment section what are your top three as well. Do you want me to do a similar video for the European markets? You know, but let me just give you guys a tip of Adidas is not in my watch list. It's not. I thought. I always laugh Adidas over Nike. but I'm not buying Adidas shares. So tell me what you think about today's video, guys. Tell me in the comment section of this video, as well as tell me what are your top 3. But as always, guys, I am your student investor, Ivan Sambo, and thank you so much for watching.